Welcome to Business Talk on businesstech.co.za. I'm your host, Michael Avery, and thrilled to have you with us today. And it's September. It's a month that brings the promise of transformation, new beginnings. It's a time when the world seems to reset, and we find ourselves asking, what's next? Well, today we're going to dive into the exciting topic of reimagining our investments as we step into September, do a bit of spring cleaning. So whether you're a seasoned investor or just starting out, this is the conversation you don't want to miss. And speaking of fresh perspectives, we've got a true expert in the house today, Wendy Myers, seasoned professional in the world of securities, head of securities at PSG Wealth. And Wendy, an absolute pleasure to have you back on the show. How are you keeping?
Well, I'm fine. Thank you, Michael. Loving the warmer weather.
Absolutely, as am I. The sinuses are begging for some rain, though, as is always the case this time of year. Now, I think our portfolios, if you've got one, are also begging for a bit of a spring clean as well. And we know the investment landscape can be extremely dynamic and ever evolving. What is the Fed doing? Where are we in the interest rate cycle? That kind of thing. But those who take the time to understand the basic principles and the different asset classes, I think really stand to gain significantly over the long haul because you just have a better understanding. So let's start from that point. What are the different asset classes that we need to consider?
Well, I think if you're looking for a balanced portfolio, the key building blocks typically are cash, bonds, unit trust, listed instruments like exchange-traded funds, and shares. That's what any investor should consider when they're looking to start up a portfolio, or if they've got an existing one. To your point.
Yeah, and it's so interesting that you talk about the balanced portfolio, because there was a couple of years ago with the traditional 60-40 kind of balanced portfolio didn't perform because we saw equities decline, we saw bonds decline. That is really an outlier in terms of what we generally see. Now, when it comes to the different asset classes, I suppose we chatted about it last time, building a nest egg. So let's just unpack the remaining 5 principles in the context of shares.
Yeah. So, look, I think what I'm very passionate about is leaving a legacy, going forward for your retirement, also for your loved ones. So that's why we really look at these 6 principles. And to your point, we chatted about building a nest egg previously. So the other 5 that I think it's important to consider is you want to be able to provide for independence and flexibility. You want to create legacy for your loved ones. You want to be able to provide comfort and understanding through your changing life cycles. Think of when you change jobs. You want to be able to provide support to your lifestyle, whether it's in retirement or obviously for now, and then looking after your loved ones. So I think it's important to unpack each of these principles and then see how it impacts your way forward from an investment perspective.
Yeah, I think that first one, independence, is very interesting because, independence can mean different things to different people sometimes. I often think of independence as getting your time back. For me, time is that most precious, most valuable commodity. You can't get it back. The sands of time are going through the hourglass. How do you define independence?
So I like the idea of having a bit of control and the ability to make decisions on my investments. So that's where I think having a share portfolio really talks to that, because you can decide, what are those shares that really make a difference in your world from a value perspective. Maybe you like a certain stock because you like the ethics of the company. Obviously, you like the product offering. And you can adapt also your portfolio to changing market conditions. Remember we spoke previously about interest rates go through cycles.
Yeah.
So you may want to have increased exposure to the banking sector when interest rates are high because you know that they're going to deliver good results. And then less commodities, which is cyclical, as we've previously spoken about. And you want to make sure that when you have this ability to be flexible, you can define those income-bearing securities that deliver dividend income versus those securities that provide capital growth.
Yeah,
so it's a nice way of getting that mix.
Yeah, absolutely. And then when you bring that back down to legacy, how does that then change the way we view this through that lens?
Well, I think, shares have always beaten inflation. They stand out as the key building block in a portfolio. And that needs to be a top consideration when you consider leaving a legacy. And I think it's really around wanting to leave a financial legacy for your future generations, and any support causes. Think of if you want to provide to certain charities, and you specifically want to leave a legacy for them to continue earning income, after you've contributed.
And it's important to consider this up front, isn't it? Because often, the way we start investing, there's tax implications, there's wrappers that you can put it in. Are you going to go through a trust, for example? And how you approach it is really defined by the end goal. And you don't want to reach that end goal and think, jeepers, I didn't actually start with the right structure in place, and now I've got to try and reverse engineer things. And there could be negative tax consequences, for example.
Exactly. So I think that's why throughout your journey of investing, it's always good, and that goes to our earlier point, to sit back and really look at your portfolio. Don't think it's something that remains static. I think a portfolio should change over time as your needs and requirements change. And that sets you up for success. I think that's where, if you have the services of a financial advisor, that they can really work with you to make sure that your portfolio is robust for the future, so that you can achieve all your investment outcomes. And you can look at each of these principles that we've spoken about and make sure that you are able to not just provide for yourself, but your loved ones, and anything that's important to you, and ultimately support your lifestyle.
Yeah, and that that lifestyle component, is something that's today. It's current. It's whether or not you want to be going to Zanzibar on holiday in December, but while also maintaining that longer term view, and getting that balance right, I think is so critical, and why I like the idea of a financial advisor. Wendy, I've got a financial advisor. I talk about markets every day, and I don't go and do this myself, because I need someone to check my biases. I need someone who's almost like
Absolutely.
a coach who I can go and do throwdowns with, and it's a relationship that I built up over time. So once you've got a plan and you know that you need to start investing today, if you haven't, what are you waiting for? Well, how do you stay true to your investment goals?
Well, I think it takes a bit of discipline, and I think you need to really consider, as your means change. Obviously, as you progress in your career, you're able to put more money aside. But also, you need to look at, how do you want to live your life in retirement, and what are your financial requirements going to be? A lot of advisors say to me that you should, for every 5% of, every 5,000 Rand you want to spend per month, you need to have at least R1 million saved. And so you work on that factor. So it's quite intimidating when you consider that equation, and you think to yourself, am I going to be ready? Am I going to have the money available? So I think the point is, it's not around, as we've spoken previously, it's not around having that once-off investment. It's around deliberately, constantly investing towards that retirement, and keeping the discipline, and making sure that your monthly budget isn't exceeded, and you're always able to put funds aside for investing. And that's how you grow that compound returns, and you benefit for the long term. And I think a final point, Michael, is that actually, as much as we talk about financial advisors, every financial advisor has their own financial advisor. So they also recognize the importance of having someone to talk to, like a coach, to help them along the way, because you can get biased from an emotional perspective.
Yeah, but I love the point you raised about we've got to watch our spending as well as our investing, because I think if a good investment actually starts there. It starts with ensuring that your income every month isn't exceeded by your expenditure. So you've got a little bit extra that you can start putting away. And the earlier you start, the magic really happens in the outer years of that compounding. And, using that figure, that rule of thumb of R1 million for every 5,000 Rand you want to spend. I mean, just think about that. If you want to, if you spend 50,000 Rand a month, say, you're going to need 10 million Rand saved. And it seems daunting. But if you start now and you stay true to the course on these kinds of strategies and considerations of the financial advisor, that's the way you can achieve it. And I've seen many people do it as well. So I've also seen many people trip up, and it's probably why, what is the Alex Forbes figure? 6% of South Africans retire with what is enough. We have to change that. And that's why conversations like this are such a key part of it. Well, look forward to chatting to you again soon as we bring the Business Talk audience more great insights from PSG and yourself, Wendy Myers, Head of Securities. Take care.
Thank you, Michael.
And that wraps up another invigorating episode of Business Talk here on Business Tech. To the viewers, thank you for joining us on this journey. Remember, the key message of today's show, it's clear. Time to take a fresh look at investing. Before we sign off, don't forget to like, share and subscribe to stay updated with the latest insights from Business Talk. And of course, visit businesstech.co.za for even more in-depth analysis and expert opinions. Until next time, I'm Michael Avery, and this has been Business Talk, wishing you all a month filled with successful investments and new beginnings. Take care.